Take a look at the chat box. Come on in. We got front row seating to learn about the ERC. Let's take a look. See, hey, as you come in to start making this experience, personal to you, if you would go to the chat box and let Joseph and I know what city you're in, right? And that way, I happen to be in Bethesda, Maryland, outside of Washington D.C. And Joseph, how about you? Where are you at?
I'm in Los Angeles. That's why all the sunshine's coming in my office. So not to brag or anything, but I know I'm out in Los Angeles.
It feels pretty good. So let us know. Take a look at the chat box here. Where participants. You got Woodbridge, Donald. Man, so glad you're not too far from where I'm at. I used to live in Bristol, Virginia, really close to Woodbridge. Albuquerque, nice. Been out there more than a few times. Albuquerque, Santa Fe. I love the fact that we can work coast to coast like this in kind of the new world where more people are on Zoom and connecting.
This is the benefit. This is the benefit. One of the positives, a few positives of what has transpired is everybody is now used to this platform or getting used to this platform, and we can stay connected. So much more engaging than a phone call.
It's pretty nice. We connect with people. I see Greg Buckman is here. Greg, you got to come over once everyone's vaccinated. Come over and play pool. We got a nice spread. So Greg and I work together. We work together now, but we worked together literally, I think it was like 26, 27 years ago. So very good. So I'm gonna give it just a half a minute more, and we'll kick things off in a big way here.
Sounds good.
Yeah, and for folks just coming in, we got a front row seat for you. Definitely get to the chat box. We want to start interacting, right? And Joseph and I are the kind of people where, as we go, if you've got questions, ask questions. We want to be careful about. We don't want the rules on this one they're complicated, and everyone's situation is different. But we want to be careful about not going too far down the rabbit hole, but still interact. There might be some things that are better we take offline and really work through your specific situation. But this, the ERC is just another phenomenal opportunity to, build the business with more capital versus less. So, Joseph, you ready?
Yeah, let's get started.
Okay, let's jump in here. We got 12:02. We're going to make sure we land on time, but between now and then, we're going to give you all exactly what you need to start to make a decision about, is the ERC right for you? So for those of you who don't know me, my name is Kirk. I'm the CEO of Foresight CFO. In addition, I teach financial management at Georgetown University, which is kind of another way of passing the torch to help people do better. I'm the husband to one and the father of two sons. And for those of you who know me, I served in the Army briefly, a couple of years. And then I'm really proud of my sons who are both young Army officers by way of West Point. So they're stepping up to serve in a pretty tense time. So we're really proud of them. So at Foresight, what we do is we create options and we help CEOs and their team members follow through on those decisions around these areas, right? We help CEOs use the numbers to win more customers, keep the customers they have the people capacity to deliver quality, get access to capital. And Joseph is our access to capital guy when we need to figure out how to get the right money. And that's why he's the perfect person to talk about, the ERC. And then, from a growth CFO standpoint and outsource accounting, how do we achieve strong financial results? So I'm really glad that Joseph is here to make us all a little bit smarter, maybe a lot smarter about, ERCs and do we qualify? So Joseph.
Hi, everyone. Joseph Meuse. I'm the owner and founder of a company called Business GPS. And I started it, my gosh, almost 10 years ago, probably 2,000, 3,000 companies that have come through our program. And my job is to help companies certainly access capital, but my job is to help companies navigate when times are difficult and there's financial stress on the business and get the business to a stronger financial footing and smarter and wiser in the process. So that's kind of this topic fits into that, the employee retention credit, how to access capital, how to use some of the tools that you might not know are available, or you've heard about it, you're not sure how to implement it. And so the cornerstone for our company is that we do everything on contingency. And I feel like a lot of things in life relate to making sure the interests are aligned. A lot of things in life, your success and failure relates to a certain mindset. So the contingency platform for me is always there to remind our team what's good for Susan's business or John's business or whoever's business is good for us. And we're in this together, and we treat it like it's our own. So anyways, that's a background of who I am and what we do.
Yeah, you really get into solving the liability side. It could be the debt structure, accounts payable, tax liabilities. We've hit more than a few home runs together. So
yeah, we're really, I tell people we're fighters. You know, we settle a lot of lawsuits. We deal with banks. You know, we do a lot of that, and I think we have the right mentality. We're very passionate about what we do, and again, some of that ties to the fact that we're in it together. We're on contingency. We're not sleepwalking through your file or through the process. You know, hey, we need to get going here because time is not our friend in most cases.
that is sure. So let's figure out who's in the room. I'm going to put a poll up here. Would definitely ask everyone to respond to it. Just this would get a size of from a revenue standpoint, and you know, last year and what do you expect this year? We're going to feel for who's here. First question is, what was your top line revenue in the prior year, 2020? Right. And then the second question, in 2021, this year, right, the new frontier that we're going into, what do you expect? Do you expect your revenue increase, decrease, or stay about the same? So we're almost at that, we're shooting for 70%. We got 67% response. There we go, hit 70. So I'm gonna keep the poll open for just a moment more, and then I'll close things out. We'll share the response, but it's completely anonymous, right, as far as people's name, and that way we all know who is in the room, who wants to find out about the ERC.
I think it's such an interesting question about what do you expect your 2021 revenue to be, because with the pandemic and everything changing, some people you think, or some businesses you think, well, I think my business is going to go down, but really it's going up. It's just really interesting how people have adapted, that business has adapted to it, where they found opportunity. It's a very dynamic situation for sure.
Yeah, I think for a lot of us, unexpected. Financial markets came back really fast. There's certain industries that are really hurting, the ones that are in particular still shut down, and there's others that are out of inventory, right? They sold what they have, and we have supply chain problems. But it's really interesting. So who's in the room? I mean, 61% of us are doing the 0 to 5 million, and then another 11%, 5 to 10. 10 to 40. That's a good. So just we got the whole spectrum of businesses all the way to 70 million and above. So that's good to know. And then check this out. I mean, almost 60% expect their business to increase this year, right? 25% about the same. And then there's another. I'm a finance guy, so I round up 18%, 20% are decreasing, and there might be some extra opportunity there to put things right. So. Nice spectrum. So let's get into this topic here.
Well, and hopefully what we're going to find is some opportunities here to get additional working capital so that more businesses can grow. Because ultimately that money is like gas in the gas tank. You're not going to get very far without. And I really like this webinar platform, Kirk. We've talked about the EIDL, we've talked about the PPP. Getting the word out is so critical because there's a lot of noise out there, and God knows the government's not doing a great job with messaging. I still talk to business owners every day. I talked to one the other day, employees and out of Indiana, and woman-owned business, and incredibly nice lady. She had not applied for the PPP. She had not applied for the EIDL. She has not applied for the ERC, and she's just busy. She's busy running a business and trying to keep everything going. And her bookkeeper isn't at that level to where, which I think is a common issue, but I guess the point of all that is it's great to at least get the word out. And really, these webinars are not about, hey, hire us a business GPS or Foresight, whatever. It's really just to inform you about what's out there. And at least if we do that, then we've done our part and done some good. So let's jump in this. The employee retention credit is the one real money opportunity that most people miss. When I say real money, I mean there are local grants and there are some other $2,000, $5,000, $10,000 opportunities out there, for sure. But the ERC can add up to a significant amount of money. So last spring, when the PPP came out, round one, the government said, business owners, you have a choice. And I read this in press releases. You have a choice. You can get the PPP or the ERC. And so most people, or almost everybody, took the PPP because it's so easy to calculate, and it's money in your bank account. So everybody went PPP, not ERC. Then fast forward to last December, and in December, the government, when they announced the second round of PPP, the government said, okay, it's not either or, you can do both. And the intention is, this is what the government's thinking, if your business was materially impacted by COVID, and you still kept people employed, W-2 employment, W-2 wages, then we want to reimburse you for some of that. We want to thank you for keeping people employed. That's the concept of government. That's the underlying concept that's there. So let's just talk about what's on the slide here.
Hey, Joseph, you gotta cut in. I mean, we find, PPP was pretty straightforward, but anytime we get involved with taxes like the ERC, it's for everybody else, it's a different thought process, different option.
This is not a simple, thanks, Kirk. This is not a simple solution. If it was simple, then honestly, everybody would know about it. And they'd be, hey, I heard my friend Johnny did it. Let me fill out the forms, whatever. The IRS came out with a 102-page guide, and it's abundantly clear, crystal clear in some areas, and in other areas, it's as murky as can be. And we're going to jump into that a little bit. So the hard part about it is the calculation process, but the output, the deliverable, is very simple and go straight to the IRS. And it's, I guess, important to note that it's an IRS program. It's not an SBA program. It's not an SBA lender program. There's no underwriting that takes place. People aren't asking for you to send your 2019 tax return or your this or your that. So that's the positive of the whole thing. The positive of the whole thing is if you can go through some of the pain of the calculation with the IRS, it's a lot of money. So what they're looking for, and this slide talks about a little bit, is hey, in 2020, there's the 2020 bucket, the 2021 bucket. And what they say is if you meet certain criteria, which we'll get into in 2020, we'll give you up to $5,000 per full-time employee. And in 2021, it's $7,000 per quarter for a total of $28,000. So that last bullet point isn't exactly accurate. It's $7,000 per quarter in 2021, potentially, for full-time W-2, up to $28,000 for 4 quarters if you qualify. So $5,000, $7,000 per quarter, it adds up to, if you qualify, a lot of money. So let's Kirk, let's jump to the next slide. The next slide really has the key. It's a very simple slide, but it holds the key to the whole thing. Okay, so this is straight from the IRS, 102-page guide. How do you qualify? You qualify if between March 13th, the end of the pandemic, to the end of the year, either or these scenarios. You had gross receipts for such quarter that were less than 50% of the gross receipts for the same quarter in 2019. So if your third quarter 2020 is down 50%, or more versus your third quarter of 2019, then you potentially qualify for wages in that third quarter of 2020 up to $5,000 per employee, 50% reimbursement. Okay. The truth is, a limited number of people qualify in that bucket. The majority, at least in my experience and what we process, that qualify is in the first bucket. Number one, fully or partially suspend its operations due to a government order limiting commerce, travel, or group meetings. In the 102-page guide with the IRS, they go through examples of this, and it's actually a little bit broader. So a good example is a vendor. So if a key vendor can't deliver goods to you because of a government order limiting commerce, travel, or group meetings, then you potentially qualify. And the key word to me in that sentence is partially.
Yeah.
No, partially an hour, partially is partially time, partially service, certain type of service we can't do, but we're open our normal hours. And in the 102-page guide, the IRS gives some wonderful examples, but you can't cover every business in the example. So somewhere around page 73, the government says, we understand that we haven't defined partially suspended, but what we really are seeking is a material impact. We haven't really defined the material impact, Kirk, but what we're going to say is 10% of revenue. 10% of revenue. So I have clients who can't go travel to see their customers because they can't do that. They can't get orders. For me, because they couldn't travel, that's one of the words there in category 1, that client qualifies, plus they had a 10%, greater than 10% reduction. You fit into bucket, to me, you fit into number 1. Okay, now you qualify. And what you're trying to figure out is what the start date is and what the end date is of that qualification. So number 1, do you qualify using one of these two options, one of these two criteria? And if you do, what's that timeline that you qualify? Okay, that's step 1. Then if you go to the next slide, go ahead, sorry.
Just briefly, so if I normally get my business at trade shows and that kind of thing, and for some reason, like the pandemic, all the trade shows were shut down for most of 2020, is that qualifying for that first criteria?
Absolutely, that qualifies. And then you want to go look at the revenue for that time frame, and that revenue for that time frame. But there's so much detail that goes into this, and this could be a webinar for 2 hours. But we'll make it in 40, 45. But okay, for what time frame? Because for some people it was from March 13th, April 2nd, or April 5th, or it's not on I get a lot of questions saying, well, I was good last year. Like my revenue ended up even. Okay, but for a period of time, it really gets to the business owner. You have a payroll on April 3rd, and you sat down and you go, oh, geez, I don't know that what's happening here? People aren't paying me. I don't know.
Yeah.
If you made that payroll during that time of distress, you were distressed because your business had stopped, it was frozen, it wasn't coming in the way it was before. That's a payroll that if it due to category and something related to category number 1, that one payroll you qualify for, in my opinion. So, and this is where you get it to so we're not a CPA firm. We do have CPAs who review all of our ERCs, give us their thoughts and guidance, because it is the IRS. We want to make sure that we're doing it as right to what they're asking for, the 102-page document, but there's this flexibility that's there, right? This is a narrow interpretation. This is a really broad one, and we try to kind of end up in here, but there is some interpretation, I guess, what I'm saying, and CPA firms are going to rely more specifically on number 2, ADP, who provides this service for clients. They're going to focus on tangible facts. Okay, item number 2. for that quarter was it down? And that's a simple to calculate. But if you had that one payroll on April 3rd or two payrolls, whatever, that qualifies.
Yeah. Is there? I have a question from Donald here. That does full-time employees or part-time employees factor in at all to the criteria?
Yeah, that's a great question. It's full-time, and full-time is defined as 30 hours or more, trailing back for a period of time. So it's full-time employees.
From a CEO perspective, that's a pretty generous definition of full-time.
Yeah, right.
At least double that.
Well, I know for business owners, yeah, they're 30 hours in 2 days sometimes.
Right.
Yeah, certainly. So then, just while we're on the subject, what they did for 2021, which I think is the next slide, Kirk, is they changed the criteria. So that first sentence or that first criteria is the same. Okay, but as we know, the country's opening up, and so the government orders, which federal, state, county, local, whatever order, aren't happening so much. So what we're finding is that a lot of people qualify bucket number 2. And bucket number 2 is different. It's a 20% or more decrease versus the same quarter in 2019 or for the immediately preceding quarter. So but for most people, where they do qualify in 2021 is the second option. And again, in 2021, the reimbursement, for lack of a better word, ratio in 2020 is 50% up to $10,000 in wages for $5,000.
Mm-hmm.
In 2021, it's 70% reimbursement up to $10,000 per quarter. Each quarter that you're eligible. So I think there's a ton of I'm finding more opportunity in 2021 than I thought. And it's obviously it's great to see because it certainly adds up quickly if you have 30 employees, 50 employees, etc. So and it's also interesting because let me go back for a second. Let me go back, but let's talk about the PPP. I know we have a FAQ slide coming up soon, but one of the other big things to take into account in all of this is the PPP. As I said before, the government said, hey, you can't have both. Then they changed. Hey, you can have both. However, if those payrolls in question, that April 3rd payroll that I was talking about last year, if, however, we, the government, have given you your PPP money for that April 3rd payroll, we can't count the April 3rd payroll.
Okay.
Okay, so that's the other big item that you have to work on. So let's go back to, let's do a 2020 example. So March 13th, COVID starts, and let's say that the business qualifies based on the criteria we were just looking at all the way through September 1st, the end of the third quarter. Okay.
Uh-huh.
However, we received a PPP on May 1st, and we spent the PPP by June 30th, so 2 months in there. So the way that we would look at it from what wages qualify would be from March 13th to May 1st. Then there's a blackout period here, May 1st to June 30th. Then the wages after June 30th to September 30th qualify again.
Okay.
So you're looking at wages from both of those two buckets to make sure that you've got enough wages in there. You're trying to maximize those wages for the 50% reimbursement of full-time employees up to $10,000. So, and there's even some nuance on the PPP, but in a simplified version, that's what you're trying to do. Kirk, does that make sense?
It makes sense, but it's getting complicated, and we probably can. There's 2 questions there that pull even more complications. So we figure out how far can we go in the webinar. Do you want to entertain? Kenneth has a question here. Let me throw that out there and see if we can make sense of it. For this venue. oops, this is gone. So Kenneth asked, can the $10,000 eligible wages be split and filed between two separate quarters for 2020?
That's a great question. So if I'm understanding it correctly, it's like the qualified wages that we're calculating from, let's say, took place in June and July of 2020. A little bit in the second quarter, a little bit in the third quarter. Yes, you can add those together. What you end up submitting is a little bit different to the IRS because the output or the deliverable here are modifying your 941s, your 941X form. Relatively, again, the hard part of the calculation, actual submission is easy. But you're going to take some of the credit on your Q2 and some of the credit on your Q3. And as long as it adds up to $10,000 worth of wages, you're good.
Good to go. Yeah, so good, kind of good, trying to dig into some of the details here. Let me ask you a question. We talked about the criteria. We talked about what ERC is. We talked about the criteria for both 2020 and 2021. So for the audience, if they want to do the back of the envelope, if they think they might qualify, how would they ballpark the rough order of magnitude? Like how much benefit could this bring to them?
But so that's a great question. So what I typically say is look at your quarterly revenue figures, and that's gonna help you figure out the time frame where your income was down. You want to at least show, again, that 10%, assuming you meet criteria number one. So look at your quarterly revenue. That's going to give you a time frame. Let's say that's 3 quarters, 9 months. Then you're going to subtract out your PPP, which is, let's say it's roughly 2 months. Again, this is back of the envelope. So then I've got 7 months worth of wages up to $10,000. Okay, how many employees did I have full time? 7 months with full-time employees, you're going to hit the $10,000 cap. I would imagine, right? 7 months worth. Hope so. So, how many full-time employees did you have for during 2020 on average? And whatever that is times 5,000 per month. You don't even have to calculate out for 7 months. So it's obviously depends on what kind of business you have and where you operate the business, your cost of wages. But for the most part, everybody should get, if they fit the criteria, everybody should get, $3,000 to $5,000 per full-time employee. Okay, how many full-time employees do I have? I got a hotel chain with hundreds, and I get a lot of smaller businesses. $10,000.
Yeah, let's go back to the envelopes. You start to feel, is this worthwhile to go forward to? And in 2021, the numbers are even greater than that.
Well, I always tell you're right. 2021 numbers are even greater, and yes, it is a headache to calculate. But even if it's one person at $5,000, I tell people, listen, if you saw $5,000 laying on the street, would you pick it up? Of course, the answer is yes. So it's worth it, and all that money. I don't know. As a business owner, you're always watching every dollar, and so why not pick up $5,000? And you can do this yourself. You don't have to use us or anybody else. You can do it yourself. You can look at the process. You can submit the forms, but at least take the opportunity. If you had any W-2 employees, my gosh, I hope you take the opportunity.
Yeah, at least get a firm calculation on what you qualify for in the dollar value. That's the good option. That's a decision point, either go or no go.
Right.
But at least get a real number. Very good. We'll come back with a couple more questions, but let's advance to the next slide. Talk about the process. I'll come back to the questions that are in the queue in just a moment.
Yeah. So this is again, I'm trying to take 102 pages, shrink it down, and then try to give some clarity to the parts that are ambiguous. So this is what the process that we go through, and you obviously need to get the process. But I look at the quarterly revenue numbers, like Kirk, we were just talking about. The revenue numbers give me some sense of how was business, was it really impacted, and when was it impacted? So I look at the quarterly numbers, I go, oh, okay, I see revenue drop here, I see revenue going back up here. Okay, so somewhere in here is roughly the window, okay? And I look at quarterly payroll. So what I do with the first 2 or 3 really the first two check marks here for each one. It allows me to come back to the business owner and go, listen, I would view, plus I need to hear everybody, I need to understand everybody's story as to how they were impacted and make sure there's some reference to it in the 100 pages. So the first two check marks are really just to give me that ballpark that you were talking about, the back of the envelope. Okay. Hey, Susan, I think it's $65,000. Okay, great. How do we fine tune it? You want to move forward? Yes, no, etc. Then we get into the amount. We're talking about what's the date funded, what's the amount, and also what's the forgiveness and calculation with the forgiveness document, which varies a tremendous amount. So then that allows us to subtract out the blackout period, and then we ultimately get down to that detailed payroll report, which is, my employee John Smith, 40 hours, $2,110.17, and we add that into his qualified wages. The term qualified wages is the term that we need that goes to what falls into that maximum $10,000 bucket. Those are good wages for what is referred to in the IRS document many times as qualified wages.
Very good.
So that's how we do it. And honestly, it takes us about a week, 10 days to go through the calculation process, to build the backup in the file, have the CPA sign off on it, and come back with a deliverable to the customer saying, here you go, Mrs. Jones, Mr. Jones. Here are the forms, please sign, let's submit, and go from there.
Yeah, and Joseph, I think it's worth highlighting that you actually have that level 1 assessment. Let's figure out on a first call if there's something there. And then the second step, if the CEO decides to go forward, is you actually have the CPA involved doing the diligence to make sure that there's a good calculation that's defendable for the business.
I assume that everything is going to get audited, although I find it highly unlikely with where the IRS is today, and that's a whole nother conversation. They are drowning. So, but I want to have a file that's complete, so that it's not just the IRS. You're going to hand it off to a new CPA firm doing your taxes, or you're thinking over an ADP, or you're doing something else. You want to have a file, and life is busy, a lot going on. Man, I can't remember, how did we calculate, what was the rationale, etc. So having the numbers and having the story, what impacted the business, how it ties to page 62 of the guide from the IRS, whatever, is critically important. And then again, our approach is we're not trying to get to the boundaries necessarily of what the IRS is potentially offering, but we're also not trying to start here. If we start here with the CPA, sometimes we're never going to be able to expand the box. So we start here, then we send it to the CPA, and if we need to tighten, we can tighten, but then we talk to the client, hey, this is what the CPA is saying, here's another way we can go, what are your thoughts, etc. And then let the client make the determination what makes sense. But I think going from here to here is a much better way of doing it.
Yeah, that definitely makes sense. Excellent. Do you want to cover anything else on the process, or do you want to go into FA?
Well, the other thing that, and I don't think there's so much here, but just real quick, because people I know are wondering, okay, I submit $65,000. What does that mean? Am I getting a deposit? Am I getting a check? Am I using our payroll? So what the IRS has said is that if it's for 2020, they would like for you to submit for a credit and a check back. That's $65,000 for 2020. Ask for a check back. If you owe back taxes, 941 taxes, it's going to get absorbed with those taxes.
Yeah.
The IRS, the other option is in 2021, the IRS has said, hey, listen, if you file it timely for Q1, Q2, etc., then we'll allow you to take in advance a Form 7200 in advance off of that credit towards your future payables. Okay. Somewhere in all of this, the IRS has said, hey, we understand that for 2020, we're late in doing this. Because remember, this guidance did really it got approved from a legislative perspective at the end of December. It didn't get published till March. IRS said, oh, the deadline for 2020 is done end of March. The IRS has said, if you really need the money, in 2021. Can't wait for a check to come back. Call us, work with us, let us know, and we'll try in the system to give you the credit for 2020. So I think the IRS is trying really hard to work with people.
I hate to say it, but it sounds like the IRS is trying to be customer friendly.
Well,
That's a first. I mean, not you know.
Yeah, well, good luck. Of course, the devil's in the detail there. You have to actually call the IRS and get a hold of a person. And somebody told me the other day the IRS is 9 months behind in opening their mail. And I think I told you, Kirk, the other day that at the end of 2019, just real quick, and this is relevant to every business owner. At the end of 2019, the outside auditing agency came in and audited the IRS and said, hey, you're behind by 183,000 paper tax returns. Behind by 183,000 paper tax returns. 2021, same audit. Auditor comes in and goes, you're behind by 12 million tax returns.
Oh my God.
So you go from 183 to 12 million, and you've got to believe that, of course, the pandemic rolls into Q1, that 12 million's only grown. So anyways, for all of you business owners out there, the IRS obviously is only more difficult to work with in terms of reaching somebody. But I think once you reach somebody, they're going to be flexible. So
yeah,
that's the story there. Okay, Kirk. Yeah, let's get to the next slide. I know time's getting by here.
Yeah.
Okay, so we talked about this. Can you do both? The answer is yes, PPP and ERC, but we have to go through the calculations. There's also the family first in there as well, but I think that's probably for another webinar. What's the deadline? I think the sooner you get this stuff in, the better, of course. For our fee, we do it at the very end. And what we do in that kind of level 1 assessment that we give, we'll give that for free. It's absolutely no problem. Hey, this is where I think you qualify when you are. Here's your PPP. This is how we roughly calculate it. And if this is correct, then I'm guessing you're going to get $65,000. Remember again. If you want us to do it based on the complication of it, it's going to be $5,000 or something in that ballpark. Most of our stuff, Kirk, I normally at Business GPS, we normally set a percentage of savings, but it's hard with this and trying to find the right number that matches. It's a relatively new program. For small mom and pops, I'll give you 3 guidance, 1, 2 people. Hey, let me help walk you through the process. I'm not going to charge you unless we're doing calculation. If I do charge you, it's probably a lot of stuff, Kirk, is falling in that $5,000 to $7,000 category, and with hotel chains and other ones, it's custom. And I do it at the end of the process, and I even tell people, listen, if you need some time to collect the benefit of this money, I'll even give you, pay me a little bit now, pay me a little bit later. I'll make it work. But we're not going to charge you anything until we get everything submitted to the IRS, and so that's how we do it.
Yeah, you try, it's a new program, figuring things out, and try to make it from a cash standpoint that it works for your clients. It sounds like
it's got to be a win. It's got to be a win. And even if I got you $100,000 credit and I charge you $20,000 right now, hey, great, you saved $80,000, but coming up with 20 grand to pay for it is the practicality of it doesn't work. It's got to always win for the business or to work for us. That's the kind of experience we want to have with.
Yeah. From a working together standpoint, the other work you do on the debt, it's all contingent, it's all performance based. So
yeah, it is. It is. We do a lot of workouts. We do a lot of lawsuit settlements. That in some ways has cooled down over the pandemic, but it's heating back up. Banks are moving forward with getting a lot of bank work because banks have been sitting on the sidelines for a year. And listen, the banks want their pound of flesh. They want their payment. So that's honestly been very active for us.
Yeah. Do you mind if I throw a few questions to you from?
Sure, please.
Okay, Craig asked, if a company realized fourth quarter 2020s that were 50% less than 2019, despite the total year for 2020 revenue was higher in 2019, are they still eligible for the ERC?
Yes. Just to repeat that back, quarter over quarter down 50%. However, the entire year even or better. The answer is that fourth quarter does qualify, assuming no PPP wages were received. I'm sorry, no PPP money was received to pay wages for the third quarter that spilled into the fourth quarter.
Yeah. So if you're in that situation, definitely get that first level calculation, beyond the back of the envelope we're doing now in the webinar. Get that.
Yeah, and I'm sorry to interrupt, Kirk, just to say real quick, every situation is different. With the PPP, it's so easy to calculate. It applies to everybody. Here, everybody has a different experience with what their business went through.
Yeah, most definitely. So next question from Greg here. If you use PPP for only say half of your payroll, would you still be eligible for for ERC for that second half?
Yes, I understand the question. So the question is, half of everybody's paycheck, that pay period, was for PPP. Can you count the other half as qualified wages? And the answer is yes.
Yeah. Very complicated. The concept is reasonable, but when you apply it to every different situation, it starts to get complicated. I got one more question here from Alyssa. She asked, so for the firm that calibrated their PPP loan for the 8 weeks are better able to access the ERC for more weeks or quarters of 2020. Does that question make sense to you? Or you want me to try to rephrase it?
I think it makes sense. I think the question relates to, are people who did 8 weeks forgiveness better off than 24 weeks? And the answer is it depends on your situation. It depends on what happened during those 8 weeks versus those 24 weeks. Now, from our perspective, in terms of calculating it, it's generally a lot easier with 8 weeks than 24 weeks. So Greg's question about the partial payrolls. But the other thing to keep in mind is that the limit, again, is $5,000 per employee. So when you look at the total bucket of qualified wages, yes, the PPP is in this window. Qualified wages is in this window. So there might be an easier way to get to the 10,000. Might be just in the outlier timeframes that is so abundantly clear you didn't get PPP. Let's pull from them, because even if you pulled collectively 30,000 in wages for an employee, you can only use 10. Sometimes we try to get to the cleanest or easiest 10 that's available.
That's good. I got 2 more questions. We're going to land the plane in a moment here. So
okay.
Is asking, he says that he took PPP 1 in 2020. It was 100% forgiven, but 60% of that was for wages, for payroll. 40% was for rent. It is from an ERC standpoint, what's available to him?
Well, it depends on, I have to see the details of the PPP when he used up the 60% versus now. But that gets into, just real quickly, let's go back to my May 1st example. You've received the PPP on May 1st, you spend it by June 30th.
Uh-huh.
Well, you spend it from the ERC's perspective when you've used up 60% of the wages. However, if you apply for forgiveness and you didn't use rent, you used 100% of wages because it was easier to do it that way, then now you've extended out your blackout period. So I guess the point there is how you submitted your PPP. Did you put down 60% wages, which was the minimum, or did you put in 100% because it's easier? You don't know at the time the impact of it. That makes a difference.
So let's go. We gotta get into landing mode, but let's cover EIDL. That's a big one that's out there.
Yeah. I forgot we had this slide. So just real quickly, everybody needs to take advantage of this. I'll try to make this really brief. There are still people who haven't even applied for an EIDL. It is tremendous money. There's up to $500,000. You haven't submitted the $500,000 at 3.75%. No payments for now 24 months. It used to be 2 months. You can accept a lesser amount. There's no personal guarantee below $200,000. I mean, even if you had a stellar company, you're not going to walk into Wells Fargo or Bank of America and get this money. The SBA changed in March besides the 12 to 24 months, no payments, they changed the calculation. So this is based off of the gross margin. Long story short, you applied before and received money, now you're going to get 4 times that money less the first money you got. So if you're eligible now with the new calculation for 400,000, you received 100,000 the first time, you're going to get $300,000 as the difference. It's a no-brainer. Then the only issue you have is the SBA. So the SBA sends out an email. Please send an email to us if you're interested to EIDL They say, don't email us any information. They say, be patient because it will take several weeks to get there. So my advice to you is, if you want the money, please take the money. At least get the money on the table. So when the SBA approves it and wants to close, you have the option, take it or not take it. And that's going to be 3 to 6 months in the future, in my opinion, my guess. Now, if you want the money, take a proactive approach. What we've been doing is we've been submitting through the reconsideration portal key documents, 2019 tax return, updated financial statements, etc. Because we know from our conversations with the SBA, there are a few key documents that they're going to want to have. Because if you think about it, they need to confirm you haven't filed for bankruptcy. They need to confirm you're still in business. All these things. So anyway, that was a handful there, I know, because I know we're running out of time. But please, it's a wonderful opportunity. If you haven't taken it, go to the SBA. If you want our help, we do it all on contingency. We only charge you when the money hits your bank account. We charge a flat fee. It depends on whether or not you've been approved or not before, but either $3,500 or $5,000. And we just call them every week in a very nice way. Hey, how are you, John? Good to talk to you. Hey, please, how is Neil's account? Can you get him? What do you need, etc. But please take that money. That's a critical change.
Yeah, that's I heard you loud and clear. There's a backlog. It takes a couple months for it to go through. If there's any potential here, any interest, get the application now. You only have an option when the application is accepted.
That's exactly right. So why not put the option? To me, I feel like as a business owner, that's what you're doing. You're trying to get options on the table all the time. Yeah. And I think we kind of covered this. We do other lending, asset-based lending, lines of credit, commercial real estate. We do what I call healthy capital or good capital because we have a long-term perspective like the business owner. We don't do anything high interest, cash advance, credit score repair, financial restructuring.
Yeah, that's excellent. So definitely call for the ERC, for other types of debt restructuring, debt access. Definitely call Joseph. I mean, he's our go-to guy. He'll talk to you like a family member to find out what's really going on. So don't hold back. Paint the picture of their situation so that Joseph can help you get the right solution. Just kind of let's go into landing mode here. We're gonna land right on time. And so we talked on the front end, what we do at Foresight CFOs, Growth CFOs, we help CEOs create options. This is one example with Joseph, access to capital. And we drive those results through by establishing the habits of profitability. So if you're interested in knowing more about Growth CFOs, how we work side by side with CEOs across the whole journey from foundation to 7 succession options, definitely contact me. If you're not ready to talk, you can take, without having that discussion, you can take the Growth CFO score to get a better feel on, how you might get additional lift and options for your business. If you're ready to hop on a discovery call and just likewise email me and I'll shoot you out a calendar invite to have that discussion. So Joseph, very much appreciate learning from your expertise. You've been your entire team, sleeves rolled up, arms in for PPP and the ERC through the last 12 months. So very much appreciate you doing this, learning with us today. Thank you.
Yeah, Kirk, my pleasure. Thanks for having me. And I think for every business owner, information is key. It's as simple as that. The more information you have, the better decisions you're going to make.
Yeah, information, create options. What if?
Exactly.
What if I had a $500,000 EIDL loan? What if?
That's right. It changes the entire course of your business, your life, your family, etc.
Yeah, it's really there. So for everyone who participated, thank you, and I look forward to talking with you and seeing you very soon on the next event next week. So
thank you, Kirk.
Thank you. Bye-bye.